Hi everyone, welcome back to the Audit and Attestation class. In this class, we'll be covering other reporting consideration. This is part 1. We have part 2 and part 3 also, which is coming just after this video. So in this video, we'll be covering comparative statement and consistency between period and other information in the document with audit report. So let's dive into to understand more in detail. Hi everyone, welcome to the last class of audit. Let me take you to the notes and we can start from there. So in chapter 5, forming, conclusion and reporting. So in last couple of classes we have covered reporting on audit engagement, reports on attestation engagement, review engagement and compliance. Now in this last class we'll be covering other reporting consideration, in which we have comparative statement and consistency between the two period. So wherever you've seen, like generally, like financial statements are comparative financial statement. So why those comparative financial statements are there, and how like what will be the auditor responsibility to ensure the consistency between those period numbers reporting, and if there is not inconsistency, then what all additional procedure we need to perform and how we need to conclude those respective engagements. So those all things we'll be covering here. Then other information in this in documents with audited statements. So like for example, along with the financial statement, you might have seen like management report, director report, lot of historical data and other things comes along with, like you might have seen like 10K. So I've shared a couple of 10Ks with you, like especially for Microsoft and GM. So you might have seen in those 10K along with the financial statement, there are a lot of other reports or other reporting which management provide to the user of the financial statement will go along with the financial statement. Those all things will come under the other information section. So those we will be covering, like what are the auditor responsibility toward them, right? And how we need to look at it. So if sometime it may be possible that management may engage you for the attestation of those engagement or review of those engagement, or otherwise what is your journal responsibility toward those other informations along with the audited financial statement which go in a 10K or along with the reporting line, right? Then we'll be covering review of interim financial information. Like we covered like review engagement. This is very much similar to the review engagement, like some of you have already have experience of limited review, quarterly reviews. So similar to that, like it's almost same what we have studied in review engagement. So quite a quick recap of what we have studied already. Then next will be supplementary information we'll be covering. So supplementary information which are being like not main part of the financial statement but go as a supplementary, of which like information are actually being extracted from the current year or other year financial statement. So maybe like historical data of employee, director remuneration, related party disclosure, those kind of things comes under a supplementary information. So what is the auditor responsibility for those supplementary information, we'll be understanding that. Then like in chapter 1, we have discussed in detail about governmental auditing standards, right? GAS we have discussed, and all the audit procedure like throughout the journey which we have studied in chapter 2, 3 and 4 is almost similar for like auditing of a government company or a listed company. In addition to that, you need to follow GAGAS. So here now we are at the conclusion section. So what type of reporting you need to make for the governmental audit or for the single audit, that we'll be learning here in 5.5.5. And after that, like special purpose and other country framework, which like we discussed earlier, like for IFRS financial statement, tax purpose financial statement, contractual purpose financial statement. So what are the reporting requirement of such, you can say, special purpose or other country reporting framework, that we'll be discussing. And then after, we have two small topic like key audit method, which we have discussed in chapter 2 when we have assessed the risk, right? So at that point of time, like some of the area we might have assessed as a fraud risk area or significant risk area, or you can say high risk area. So those risk area are generally considered as a key audit matter or critical audit matter, and as an auditor it's being our responsibility to communicate that through our report. It's not a qualification, but it just like matter which auditor has identified as a significant in terms of risk and in terms of magnitude which they wants to bring into the attention of the user of the financial statement, and then certain miscellaneous topics. So these all things we're gonna cover today. So maybe like if we left over with like small topics like miscellaneous or key audit matter, I'll send you the notes for the same. So might not be a big deal to crack those codes. So here coming to the note section. So let me increase the size a bit over here. So here if you see like other reporting consideration, we have 8 things. First one is comparative statement and consistency between those comparative statement. So like we discussed earlier, like financial statement are generally current year and previous year number. So here you need to ensure the appropriate classification as well as appropriate application of the accounting standards, same as in current year as well as previous year. If there is any inconsistency, then you need to identify those inconsistencies. If those inconsistencies are material, then you need to communicate to the management and request them to make the respective correction. If they agree, then it's fine. If they don't agree, and if the misstatement is material, then you need to look at whether it required a qualification, modification, or does it require an adverse opinion, because this is a purely a gap issue. It's not a gas issue which required a disclaimer of opinion, right? Second thing is other information in document with audit statement, like we have discussed already in detail, like whether management reporting, director reportings, historical information, sales information, and other things which comes along with the audited financial statement. So what is the audited financial statement said is 5 things. One is your balance sheet, second is your income statement, third is your cash flow statement, fourth is your equity statement, and fifth is your notes to accounts. So these are the 5 statements which comprise or is called financial statement. Make sense? What are the 5 statements comprised in the financial statement?
The balance sheet,
P&L
income
account, balance sheet.
statement,
Income
cash
statement,
flow,
cash flow report, equity report, and notes to account.
Notes to accounts, right? Balance sheet, income statement, equity statement, cash flow, and notes to account. These are the 5 things which comprise a financial statement which we as a CPA do the audit. In addition to that, management provide a lot of other information like management discussion analysis, management report, director report, and other like supplementary information. Then third one is review engagement, which we have already studied in detail along with the review engagement section in chapter 2, 3, and 4 as well, and in the 5 section as well. So nothing much new over here. Supplementary information we have already discussed, and additional reporting requirement for the government and the special purpose, and lastly critical audit matter and miscellaneous topics. So we are jumping into the first main topic of the day, that is comparative statement and consistency between the periods. So they both comes under the different AUC, which is auditing standard codification. AUC means auditing standard codification. 700 says report on the comparative financial statement, and 708 says reporting on consistency. So we need to keep both in mind whenever we are doing an audit of financial statement, right? So if you look at left hand side, report on comparative financial statement. Comparative financial statement, that means previous year number and current year number. So what all things you need to keep in mind? First is the financial statement generally contain comparative financial information of the current period and earlier period. Second, if the earlier period financial information were not audited, there might be a possibility for a non-issuer that previous year financial statement are not audited, right? Yes or no?
Yes, sir.
Is audit mandatory for a non-issuer?
No, sir.
No,
No.
sir.
So
But
there
for
might
issuer,
be a
it is compulsory.
right? There might be a possibility that previous year financial statement were not audited. The auditor should clearly indicate the same and work, if any, performed and the degree of the responsibility assumed. Yes, someone is saying. Yes, Sanjit, you're saying anything?
No, sir.
Okay, okay. I thought someone is trying to say anything. Sorry. Okay. So second thing, in your report, you need to clearly mention that previous year number were not audited. And if you have performed any procedure, then you need to mention that, and degree of responsibility of the previous number you are assuming. That is also you need to mention if you are assuming and if you are performing any procedure for the previous year number. Right. Third is, if entity requests the auditor to express opinion on earlier period. If the entity has engaged you to conduct the audit of the current year and they request you to audit the previous number also and give a consolidated opinion, or you can say give an opinion on the comparative financial statement. So in that case of scenario, you need to plan and perform appropriate additional audit procedure to ensure the earlier year period financial information are sufficient to constitute the fair presentation in accordance with the applicable reporting framework. Right. When current period opinion of previous year information differ from the previous year auditor report. That means previous year number were audited by predecessor auditor, right? And your opinion to the previous year number is differ from the predecessor opinion. In that case of scenario, there might be two situations possible. One is predecessor auditor agree, right? Or the second is predecessor auditor does not agree to reissue the report. If predecessor auditor does not agree to reissue the report, what you need to do? You need to give in emphasis of matter paragraph or other matter paragraph. How do you draft that EOM or other matter paragraph? In that, you'll be mentioning that the financial statement of the prior period were audited by a predecessor auditor, and the type of opinion expressed by the predecessor auditor, and if the opinion was modified, the reason thereof. The nature of emphasis of matter paragraph or other matter paragraph included in the predecessor auditor report, if any. So first you need to give the reference of the predecessor auditor report and whether that predecessor auditor report was issuing a modified opinion, qualified opinion, adverse opinion, or was there any emphasis of matter paragraph in that report. Any doubt? So far so good.
Sorry, can I ask a question? We started with 5.5. Aren't we doing 5.4?
No, 5.4 we have did in last class. That was a very small topic.
Okay. Wasn't a part of the notes, probably that's why I'm confused.
No, it was. If you see.
No, the notes that you sent.
5.3 and 5.4. This is what I have sent.
Okay.
It's a very, very small topic, tiny topic. See.
Acha, okay. Sorry, I might have missed it. Thank you.
Cool. Let's come back here. Okay. So in addition to that, nature of emphasis of matter, substantive reason for the difference of opinion, why your opinion is different than the predecessor auditor, you need to mention the reason for that, and that the auditor opinion on the amended financial statement is different from the auditor's previous opinion. And then the last thing is date of the report. Those things you need to mention in your respective reports. If you differ from the predecessor auditor and predecessor auditor is not agreed to make the amendments, to make the revision in their opinion, so in that case of scenario, you'll be giving emphasis of matter paragraph or other matter paragraph in your report and giving the reference of the predecessor auditor report and what all areas you are expecting are different from the predecessor auditor report, right? So those things you need to mention over here. If predecessor auditor agree to issue the revised report, then restate the financial statement of prior period, and auditor should express an opinion on the current period. So it has not required to mention anything from the previous year. Make sense? Yes, no?
Yes, sir.
Okay, cool. So now coming to the right hand side, reporting on consistency. First we understood reporting on comparative. Now we are discussing reporting on consistency. In reporting of consistency, when it comes to consistency, you need to look at three things. One is like any change in accounting principle, right? Or second is any material change in accounting estimate or any change in classification. And lastly, if there is any change in reporting entity. So these are the more major four factor when you look at it more in detail about the consistency of the application of accounting standards or accounting standard codification. First one is change. Evaluate the change in accounting principle to determine the impact. So for example, if there is a new accounting standard codification came in, so at that point of time you need to ensure as per the new ASC you have changed the current year number, but it requires you to change the previous year number as well to ensure the consistency of application of accounting standard codification. Make sense? Some of you might have worked on like ASC 606 or 842 or maybe 326 or maybe like any IFRS implementation program or NDS implementation program if you guys have any experience. Any of you have experience on working on change in accounting standard impact? Nimisha, Kush, Dipti, you guys would like to share your experience? Yeah, Kush, Nimisha, Dipti.
कमल ऐसे न्यू अकाउंटिंग स्टैंडर्ड कोडिफिकेशन पे तो काम नहीं किया मैंने. Sorry about that.
No problem. Dipti, how about you? Or Kush?
Same for me. I haven't worked.
Kush?
हाँ जी सर, सॉरी मेरा नेट ड्रॉप हो गया था. What was the question?
So we were discussing on the reporting on consistency. In that first point, we were discussing evaluate the change in accounting principle, determine the impact thereof. First point was when new accounting standard comes. So in that case of scenario, we will change the current year number as per new accounting standard. And to ensure the consistency of application of the new accounting standard, we update the previous year number as well. Right. So some of you might have, I thought some of you might have experience of working on new accounting standards or
Yes, sir.
implementation of
I have.
new accounting standard. Yeah, would you like to share your experience?
Sure, sir. I mean, I've worked on when 606 came in, and I think you were the first one whom I worked with. So the new revenue recognition standard which changed from 605 to 606, that's when I worked on, and then I also did some work when Lee standard was there, which is 842. So did contract reviews and all, and I think the question was whether it is going to be a retrospective impact or it is going to be a non-retrospective impact. So I mean, it is kind of interesting but challenging as well because things change, and then nobody has a fair idea of what exactly needs to be done. But then I think somebody like you who reads 120, 140 pages of guidance to explain it to us is what makes it easier for us. But any other, yeah, I think that's how it was, right?
Yeah, no, like my question is like when you have seen like those when you are applying new accounting standard for current year,
Right.
so you might have applied on the previous year number as well,
Yes,
and you have
yes,
taken the impact on the opening date
impact
year
on
number.
it. Exactly. Yes, sir.
Right.
We
So
did.
that's what like we wanted to bring it out in the
Yes.
classroom. Like when you might be like if you have studied in Indian accounting standards. So back in 2013, we have transformed the Companies Act 2002 to 2013. At that point of time also, this Ind AS has been launched in India. So there was so much impact on transition from old Indian accounting standard to Ind AS. Same way, like couple of companies might have moving from their local GAAP to the IFRS. So whenever there is any change in accounting standards, or whenever companies wants to implement new accounting standard, so they need to impact in current year as well as previous year and opening balances as well. Right. Second one, B point is change from one acceptable method to another acceptable method. For example, like earlier year, you were using written down value of depreciation method. And in current year, you want to apply for straight line method of depreciation, which now you feel is a better method. So maybe previous year you might be using FIFO method for valuation of inventory, but now you want to be weighted average method to be more practicable and more reasonable, giving you the appropriate value of your inventory at the beginning as well as closing. So in that case of scenario, when you are changing the method from one acceptable method to another acceptable method, in that case of scenario also you need to consider the impact in previous year number and the opening balances as well. Make sense? So you cannot say like previous year number inventory valuation was done based on LIFO or FIFO and current year inventory is based on weighted average. No, you need to give apple to apple comparison. If you are changing from FIFO to weighted average of current year inventory balance, so it's mean your responsibility to make sure changes in the previous year balances as well to make apple to apple comparison. Make sense, everyone? Yeah, Sanchit, Nimisha, Rahul, Kashish.
Yes, sir. Yes, sir.
Yeah.
Right.
Yes, sir.
Third point is the disclosure related to accounting change are appropriate and adequate. So whatever the impact of those accounting standard change or change in method should be appropriately disclosed in the respective notes to accounts. Last one is the entity has a justified that the alternative accounting principle is preferable. So when you are changing from one acceptable accounting principle or one acceptable accounting method to another acceptable methods, you need to give the justification why you have changed and why this new method is more preferable, right? So that you need to disclose appropriately in the notes to accounts. When the impact of change is material, if appropriate disclosure and presentation are considered in the financial statement, then auditor should include EOM, emphasis of matter. If appropriate disclosure and presentation are not considered in the financial statement, then you need to evaluate for the modification. That's a gap issue. So how do you draft the modification in the audit report? So for example, as discussed in note number X, for example, let's say you have changed from inventory FIFO method to weighted average method and you have like note number 10 for the inventory. So as discussed in note number 10 to the financial statement, the entity has elected to change the method of accounting from like FIFO method to weighted average method in current year of the financial statement that reflect the accounting method change. Our opinion is not modified with respect of the matter. So when you are putting only emphasis of matter paragraph, but when you are giving a qualification and when there is a difference and then management has not made the respective changes, in that case of scenario you will be putting a different language which is a more of qualification language. Right, now coming to the material change in accounting estimate. First one is change in accounting principle. Change in accounting principle. Second one is change in accounting estimate. What is change in accounting estimate? Any idea? Any idea what is change in accounting estimate?
So like change in provisions.
Like?
And accounting estimates are basically, so like the estimates that we have made for our provisions or the depreciation kind of thing. So any change in those would be the change in accounting estimate.
Yeah, any examples you would like to add?
Like changing useful life of assets. Will that be part of this?
Yeah. Anything else? So accounting estimates, like you said, there are two types. One is like routine accounting estimate, for example, like provision for doubtful debt, change in the life of the assets, provision for obsolete inventory, right? So in that case of scenario, if there is no material deficit, you can say misstatement, then you are not required to make any change in the audit report. Other kind of accounting estimates are those estimates which required restatement of prior period as well. So for example, like we were discussing earlier, this is also an estimate, like when you are changing the method, right, from FIFO to weighted average method, right, or maybe like any estimate which may require any change in the previous year financial statement as well. For example, like you might have missed something in the previous year. For example, like you are doing provision for long-term employee benefit. So ideally, the rate of increment you should have been considered 10%, but unfortunately, you have considered 5% or 6% or 7% in the current year as well as previous year. Previous year somehow it was missed, and in current year you have identified that this misstatement has happened in previous year, and that required a restatement in the previous year number as well. So those kind of you can say estimates which may result into restatement of prior year. For that, in that case of estimate, you need to give the disclosure in the EOM, emphasis of matter paragraph. But when it's a routine estimation like provision for doubtful debt, provision for inventory, provision for long-term employee benefits, right, in that case of estimation, it's not required any separate disclosure in the auditor report. Third is, any doubt here? So far so good. Estimate that may require restatement of previous year need to be disclosed in emphasis of matter paragraph. Estimate that do not require any change in the previous year number, those are called routine estimation. Make sense in simple word?
Yes, sir.
Yes, sir.
Third one is change in classification. Change in classification, identify change in accounting principle or an adjustment to correct the material misstatement in previously issued financial statement. So no impact on the audit report except the change in the presentation, the correction of the material misstatement or change in accounting principle, which we have discussed in point number 1 above, right? Fourth one is change in the reporting entity. Change in reporting entity means there is any acquisition, there is any merger, there is a change in shareholding, there is any disposal of any, you can say, segment. So in that case of scenario, it is considered as a change in reporting entity, right? So one account of this may be on account of merger, acquisition, disposal, or any other reason. If there is no change in accounting principle from prior year, that means any you have acquired any company, their accounting principle application and your accounting principle application is same, then in that case of scenario no impact on the audit report is required. But if there is any change in application of accounting principle from the previous year to current year, then emphasis of matter paragraph is required. Make sense?
Yes, sir. But sir, can you share an example of change in classification?
Change in classification, yeah,
Yeah.
simply like for example, like previous year, you have identified certain asset as a non-current asset, but now you have kept it held for sale assets. So now it may be it need to be classified in current assets rather than non-current assets.
So, but does in that case we won't be changing our previous year financial, no?
No, you'll be just changing the number, but it does not require any impact on the audit reports.
Okay. Okay.
Mhm.
When we say about restatement, then we would be checking, we would be making impact on
Emphasis
previous
of
year
matter paragraph, yeah.
AOM as well. Okay.
Mhm.
Rent classification. Got it, sir.
Right. So this is about the first point, comparative statement and consistency between the two period as per auditing standard codification 700 and 708. Now we are coming to the second main topic, which is other information in document with audited statements. So other information, like we discussed earlier as well, management report, director report, financial summary, employee data, planned capital expenditure, financial ratio, name of officer, name of director, director remuneration, like selected quarterly data and other reports highlighted in the in firm performance, that is not subject to audit procedure. So for example, like do you guys have those financial statements which I have shared with you for Microsoft and GM? Like for example, this is 10K of General Motors, right? Here if you see in this 10K, in addition to financial statement, they have given like overview of business, overview of the business risk, unresolved staff comment, proprietaries, legal proceeding, mining safety disclosure, right? Selected financial data, MDA, quantitative disclosure about market, supplementary information, and all those things. So these all are called other information along with the financial statement, like director, executive officer and corporate governance report, executive compensation, right? These all are called other information or supplementary information. Make sense? Yes, no?
Yes, sir.
So in that case of scenario, these all are information going along with your audited financial statement. So now look at from the perspective of the user of this annual report. They might seem like auditor might have looked at it, right? Financial statement is being complete responsibility that you are auditing, but you have certain responsibility toward these information as well. First one is determining whether a material inconsistency exists between other information and the financial statement. So what you have audited financial statement or what management is presenting in other information section, was there any material inconsistency? If yes, then it's your responsibility to identify that. Second is obtain management written acknowledgement regarding which document comprise the annual report and when and how the entity plan to issue the information. So you need to take the acknowledgement from the management what all information along with the financial statement you are planning to attach in your annual report. Third is appropriately respond of any material inconsistency. If you have noticed any material inconsistency, it's been your responsibility to appropriately respond to those material inconsistency, material misstatement or other misleading information noticed in other information section. So what all things you will be doing to achieve those responsibilities? First one is you will be discussing with the management, right? Second, if needed, perform additional audit procedure. Third, if material inconsistencies still exist, then evaluate if there is any change in the overall risk assessment required or the overall impact on the audit of financial statement on account of those inconsistencies. And if there is an inconsistency you have noticed and management is not agreed to change, then you need to provide into the other information paragraph in your audit report. Make sense? Yes, no, any doubt?
सर लास्ट वाला एक बार ही फिर से बताओ.
Other information paragraph,
हाँ जी सर.
right? If there is any inconsistency, material inconsistency noticed between what is being mentioned in the financial statement and what is being reflected in the other information data. First, you will be communicating to the management, like these are the inconsistency we have noticed, and you'll be requesting them to update. If they update, then it is fine. If they do not update, then what you will do? You need to mention in the other information paragraph in your audit report.
Okay.
Right? Other information will not result into any qualification directly, and it is neither an emphasis of other paragraph. Right? But you want to bring into the attention of the user of financial statement, so you have a right to provide in the other information paragraph. Make sense?
Okay सर. सर वैसे EOM में क्यों नहीं करते हम?
EOM में only those specific things will come, 6 things which we have discussed earlier.
Okay, okay.
Right, those has been specifically mentioned. If there is any issue relating to those 6 matter, then you need to come into the EOM. Other than that, it will go in other matter paragraph.
बाकी से जो भी एक्स्ट्रा चीजें आएंगी वो सब इसी में है.
Yes.
Okay.
Right. First one is management discussion and analysis. So for public company, preparing the management discussion analysis in accordance with the rule and regulation adopted by SEC. So who will be preparing the MDA? Management, right? How do they prepare the MDA? Based on the rules and regulation issued by the Security Exchange Commission. For non-public company, they also prepare MDA presentation, and whose management provide a written assertion that presentation has been prepared using the rule and regulation adopted by the SEC. So whether you are an issuer or a non-issuer, if you are preparing and presenting an MDA, it has to be prepared and presented in line with the rules and regulations issued by the SEC, right? So there might be a possibility that entity may hire you or may engage you for performing an examination of MDA or a review of MDA, right? If they engage you for examination of MDA, look at left hand side. The objective is to express an opinion on MDA now, not on financial statement. Financial statement you are doing audit. In addition to that, they have given you engagement to examine the MDA as well. So you'll be following attestation standard. What are the attestation standard?
SSAE.
SSAE is absolutely right. Right. So if they have involved you in examination of the MDA, then you will be following SSAE and performing an examination engagement in addition to audit of the financial statement. Only those auditors can be appointed for the examination of review engagement who are conducting the audit of the financial statement. No other auditor can be appointed for examination or review engagement of the MDA, right? So now look at the pointers here in the left hand side. Objective is to express an opinion on MDA, right? So taken as a whole, by reporting whether first the presentation include in all material respect the required element of the rules and regulation adopted by the SEC. So you need to ensure that the MDA has been prepared in line with the rules and regulations required by the SEC. Second is the historical financial amount have been accurately derived in all material respect from the entity's financial statement. If, for example, there is an historical data given, for example, let's say if you go to here, if you see, I'll show you, there might be some information. So for example, this 6 item, if you go here, management discussion and analysis, so if you'll see, so 3-year data has been given here, 2018, 19 and 20, right? So here you need to ensure this data is coming from the actual audited financial statement of the respected year, right? So they're saying net income attributable to the shareholder. That means net income after tax has been coming here, right? So tax expenses, automotive interest income, automotive interest expense, then adjustment, GMI, all those things. So these all information should be coming directly from the audited financial information of audited financial statement. For example, here if you see earning per share, they are disclosing here for 3 years, 2018, 19 and 20. So this should be coming from the audited financial statement of 18, 19 and 20, which include like amount and per share value as well. Make sense? Can you correlate the theory which we are discussing with those financial statements?
Yes, sir.
So point here is saying historical financial amount have been accurately derived from the material respect of the entity's financial statement. That means the financial statement which you have audited in current year or earlier year, if there is any historical information coming in MDA, it should be derived from there directly, and it's been your responsibility to vet those information. C point is the underlying information determination, estimation and assumption of the entity provided a reasonable basis of the disclosure containing therein. So what all assumption you are taking should provide a reasonable basis for the disclosure of the respective amount. So those are the key objective of the examination of MDA, right? But what all examination procedure you'll be performing to achieve the reasonable assurance to provide an opinion? First one is obtain an understanding of the rules and regulations adopted by SEC for MDA, right? Second is planning of engagement. Third is consider the relevant portion of the entity's internal controls applicable to MDA. Obtain sufficient evidence, including testing of completeness. How do you obtain sufficient and appropriate evidence? By inquiry, observation. What all things in addition to that you will do? Inquiry, observation,
Recalculations.
सर
recalculation,
reperformance rollback forward होता है,
inspections,
performance inspection rollback forward, and
right?
last one is
Yeah, these are the 5 only: inquiry, observation, inspection, recalculation, and reperformance.
rollback forward भी तो होता है.
Yeah, that comes under the inspection procedure, right? And
Okay.
confirmation procedure, right? Obtain sufficient evidence, including testing completeness. Consider the effect of the event of subsequent to the balance sheet date. So if here also, if you have been appointed for the examination of MDA, you need to look at the subsequent event as well. Then obtain a written representation from the management and from the opinion about whether the MDA present include all material respect the required element of the rules and regulation adopted by SEC, whether the historical financial amount included herein have been accurately derived from the financial statement in all material respect, and whether the underlying information, determination, estimation, and assumption of the entity provide a reasonable basis for the disclosure contained in MDA. So these all things you need to perform to achieve the examination objective of MDA. Now coming to the right hand side, review engagement. So there might be possibility that you are doing audit of financial statement and company may engage you to perform the review on the MDA, management discussion and analysis as well. Which standard you follow for the review? Which standard? SARS, right? Objective of the review of MDA is to report whether the information came to the practitioner attention to cause a practitioner believe that. So here you will be giving a negative assurance or you will be giving a limited assurance. In that case of scenario, it's saying if any information which is misleading or wrong information come into your attention, then only you'll be reporting those things. Otherwise, you'll be performing what are procedure you perform in review? Inquiries and
Analytical
procedure, right? So the MDA presentation does not include in all material respect the required element of rules and regulation adopted by SEC. The historical financial amount included herein have not accurately derived in all material respect from the entity's financial statement. Third is the underlying information, determination, estimation, and assumption of the entity do not provide a reasonable basis of disclosure. If any such things comes into your attention, then only you will be providing such disclosure in your review report. What are the procedures you will be performing for the review engagement? Inquiries and analytical, right? So first thing, if you see point number A, obtain an understanding of the rules and regulation adopted by SEC. Planning of the engagement, consider the relevant portion of the entity internal control. Fourth one, applying the analytical procedure and make inquiry. So in the examination, you obtain sufficient document and information, whereas in review engagement, you'll be applying the analytical procedure and making an inquiry with management and others. Then consider the effect of a subsequent event. Here also obtain a written representation and then forming a conclusion as to whether the information came to the petitioner attention that caused practitioner to believe that believe any of the following. First one, MDA presentation does not include in all material respect the required element of rule and regulation of SEC. Second is historical financial information is extracted is not accurate, and third one is underlying information determining the estimate and assumption of the entity do not provide a reasonable basis of the disclosure. So if any such wrong information come to the attention of the auditor or the review practitioner, then he or she need to disclose that in their reporting paragraph, right? Couple of things you need to keep in mind whether it's a review engagement or an examination engagement for MDA. First one is practitioner can accept the examination or review engagement of MDA provided practitioner has conducted the audit in accordance with GAS. So if you have conducted the audit of the financial statement, then only you can accept the review or examination engagement of MDA. If you are not a main auditor of the financial statement, then you cannot accept such engagement. Second is management responsibility. Preparation of the entity MDA present to the rules and regulation of SEC is being responsibility of management. So what is the responsibility of management? Preparation of MDA in line with the rules of SEC, right? Third is if practitioner notice any inconsistency in MDA information, practitioner should inform to the management for corrective action. If management refuses, inform the audit committee or equivalent authority, right? So what all things you will be doing if there is any inconsistency? First, you will be informing the management. If management does not agree, then your responsibility is to inform to the audit committee or those charged with governance. Make sense?
सर ऑडिट कमेटी को तो सर तब करेंगे ना जब वो मतलब
when management refuses to make the corrections.
हाँ हाँ पर लेकिन सर वो उसमें भी तो वो अगर वो पब्लिक एंटिटी होगी देन
if it is a public entity, then audit committee. If it
और
is
अगर
not
अगर
public, then those charged with
हाँ
governance.
दो चार भी करना शेयर होल्डर्स एज वेल ठीक
Right?
Sir, MDAs are mandatory procedure, like
For
portions
issuer,
in the.
it's mandatory. For
Okay.
non-issuer, it's not.
Okay. Okay.
Because the MDA comes under the SEC rules and regulation. So it's been mandatory for a listed company. For a private company or non-issuer, it's recommendatory, not mandatory. But if non-issuer adopted to disclose MDA, then they need to follow SEC rules and regulation for the disclosure perspective.
An auditor has to check the consistency and all that procedures.
Yes. Right.